Hello everyone, welcome back to my YouTube channel. Today we are diving into a lesser known but interesting inventory valuation method, that is HIFO method, highest in first out method. So let's understand what it is, how it works and see an example too. See here, this means that whenever goods are issued from inventory, the units with the highest purchase cost are issued first regardless of when they were purchased. It means what here? We are issuing the materials at highest purchase cost. At highest purchase cost. Here we should not consider the dates regardless of when they were purchased. If there is highest purchase cost, we need to consider that only to issue the materials. Let's understand this through one example. See example, purchases on January 1st 100 units at rupees 10 and Jan 5th 100 units at rupees 12. Jan 10th 100 units at rupees 15. These all are purchases. Here the highest purchase cost is, that is Jan 10th 100 units at rupees 15, right? So we should consider this purchase cost to issue the materials. Clear? Issue Jan 15th 150 units issued. 150 units issued. So according to the HIFO, we issue the costliest units first. So here 150 units means here costliest purchase cost is rupees 15. But here we need to first issue 100 units, right? So 100 units at rupees 15. At rupees 15 equals to rupees 1500. Now remaining 50 units. Now second costliest is 10 or 12. 12, that is on Jan 5th 100 units at rupees 12. Means here we have to issue only 50 units out of 100 at rupees 12, means 600. So total 2100. That is our cost of goods issued or sold. Clear? So remaining inventory is is 50 units. Out of 100 we issued 50, right? So remaining 50 units at rupees 12 and on Jan 1st 100 units at rupees 10. At rupees 10. This is our remaining inventory. So here when we are issuing the materials, we have to take the purchase cost, that is the costlier one. Okay, so according to HIFO, we issue the costliest units first. Clear? So let's see one example. The following transactions occurred in the books of XYZ traders for the month of April 25. So purchases on April 1st 100 units at rupees 20 and April 5th 200 units at rupees 25 and April 10th 150 units at rupees 22 and April 15th 100 units at rupees 28. Now issues on April 12th 250 units issued. Till April 10th we purchased. After on April 12th we issue 250 units. On April 18th 150 units issued. Before that we purchased on April 15th, that is 100 units. After that we issued 150 units. On April 25th 50 units issued. So required, calculate the value of inventory issued using HIFO method. Second one is find the value of closing stock on April 30th. So let's solve the problem. Yes. See, this is the format of stores ledger account. Now on April 1st, that is our opening stock, 100 units at rupees 20. So write down 2025 April 1st. April 1st. That is, write down in the balance column 100 at the rate of 20 means amounts to rupees 2000. Clear? Now after April 1st, next April 5th, 200 units at rupees 25. That is the purchase. Means in the receipt column we need to enter this transaction. On April 5th, we purchased 200 units at the rate of rupees 25. 200 units at the rate of 25 means rupees 5000. That amounts to rupees 5000. Now go to the balance column and write down the materials with us like LIFO and FIFO. First write down April 1st inventory. Next April 5th, that is 200 25 5000. Clear? Now April 6th, there is no any transaction. 7th also, 8th also, 9th also. Now April 10th, again purchased 150 units at the rate of rupees 22. So April 10th, write down April 10th, 150 units at the rate of rupees 22. 150 into 22 amounts to rupees 3300. Clear? Now go to the balance column and write down first 100 into 20 and after that 200 at the rate of 25 5000. Now write down April 10th transaction 3300. Clear? Now see after April 5th, April 10 override. Next April 10, after that April 15, but before that there is one issue. On April 12th, there is issue of 250 units. 250 units. Now what we have to do? According to HIFO, we issue the costliest units first. For that we need to check the purchase price. Purchase price. See on April 12th, write down the date first. April 12th issued 250 units. Here in this, see the balance column. Here 100 units are there, 200 units are there and 150 units are there. Clear? In HIFO method, what we have to do? First we need to check the costliest purchase price. Here costliest purchase price is 25. That is 200 units at the rate of 25 amounts to rupees 5000. So here we issue 250 units, but here only 200 units are there, right? So issue first 200 units. Go to the issue column and write down 200 at the rate of 25. That equals to rupees 5000. And after that, after second costliest purchase price is 22. We issue 200. Still we need to issue 50 units, right? So out of 150 units, issue 50 units at the rate of 22. 50 into 22. How much? That is rupees 1100. 1100. I hope this is clear to you all. Now go to the balance column. In the first inventory, that is 100 at the rate of 20, we have not issued anything. So write down as it is 22,000. Now 200. Here we issued full 200 units. Right? So don't write down. Now next, out of 150 we issued only 50 units. Means remaining 100 units we need to enter here. 100 at the rate of rupees 22. That amounts to rupees 2200. 2200. Clear? Now go to the next transaction. After 12th, we purchased on April 15th 100 units at rupees 28. So write down on 15th 100 units at rupees 28. That amounts to rupees 2800. Now go to the balance column and write down first you enter these transactions 100, 22, 2200, and after that 128, 2800. Clear? 1 minute. Yeah. Next, after that, after April 15th, we issued on April 18th, right? We issued 150 units. We issued 150 units. So, 1 minute. Yes. April 18th. April 18th, we issued 150 units. So, here, now check the costliest purchase price. That is 28. That is 28, right? That is, just you should see only the cost at purchase price. Don't see the dates. Clear? So, here cost at purchase price is rupees 28. So, issue first 100 units. We issued here 150, but here only 100 units are there. So, issue 100 units at the rate of rupees 28. That amounts to rupees 2800. Now, remaining 50 units. Now, second costliest purchase price is, that is rupees 22. So, out of 100 issue 50 units. 50 at the rate of 22. 50 into 22, that is 1100. 1100. Now remaining balance 100, write down it as it is, and in the second one we issued only 50 units. So write down 50 into 22, 1100. Clear? In third one we issued fully 100 at the rate of 28, that is amounts to rupees 2800. Now go to the next transaction. 18th over, right? 15th also over. Now issue on April 25th, there is an issue of 50 units. Issue of 50 units. So write down the date first. April 25th, 50 units issued. So now check the costliest purchase price. 20 or 22? 22 is our costliest purchase price. So issue 50 units we issued, right? Here also 50 units are there. So issued 50 at the rate of 22 amounts to rupees 1100. Now remaining balance is 100 at the rate of 22,000. So this is our closing stock. So calculate the value of inventory issued using the HIFO method is over, and find the value of closing stock on April 30th. So value of closing stock is value of closing stock 100 units at the rate of rupees 20 equals to rupees 2000. This is our value of closing stock. Clear? In LIFO method, we issue the materials according to or based on recent purchase. In FIFO, we used to issue the materials based on oldest purchase. Means first in, first out. Means if we purchased first 100 units and after that we purchased again 200 units, we have to issue first 100 units as per the FIFO method. But in HIFO method, we have to check the costliest purchase price. That's it. Okay. This is the difference between FIFO, LIFO and HIFO. Clear? I hope this problem is clear to you all. If not, please leave a comment. And if anyone wants the solution of this problem, please comment, and I will upload in my Telegram channel, and I will provide the link in the description box. Thank you.